The stock market had one of the best reactions to a jobs report ever on record last week. But does this mean recession is no longer a possibility and the stock market is going to all-time highs? Now, this is what we're going to discuss in today's video, along with the trading setups and technical analysis to be watching out for the week ahead. As always, guys, if you do enjoy today's video, please give it a like and share it with anyone else that might find it useful. And if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now let's start off by discussing what happened on Friday. And guys, following a stronger than expected jobs report, we finally managed to break out of this consolidation. And the stock market actually had one of its best days since the end of November. But what did the actual jobs report showed us? Now it showed us that there were 223K worth of new jobs added last month in the US, and it showed us that the unemployment rate is at 3.5%. Now this is one of the lowest unemployment rates in history ever in the US. Now one of the reasons I'm not trusting this data here, guys, is because every single day on the news we are hearing of new companies laying laying off a lot of employees, and I mean it just doesn't make sense. We are hearing this more and more companies each day laying off employees, and yet again the unemployment rate is at its lowest. Just doesn't make sense at all. And guys, if we are to just quickly have a look at this, I mean, it's just been a week in 2023, and we already have a lot of companies laying off employees already. We have Amazon laying off 1 to 2% of its workforce. We have Salesforce laying off 10% of its workforce. We have Goldman Sachs laying off 8% of its workforce. I mean, does this show to you guys that the economy and the jobs, in terms of the jobs added and in terms of the unemployment rate, is healthy? I mean, it doesn't to me at all whatsoever. It's just saying that we are literally heading in one of the biggest recessions ever recorded on history. And if we are to look at this, I mean, in terms of in 2022, we had so many companies laying off employees, guys. We had Cisco laying off 5% of its workforce, and if we're just to look at the high numbers here, I mean, and the biggest companies, Meta was laid off 13% of its workforce. Twitter laid off 50% of its workforce in November, and if we just go down the list, Snapchat laid off 20% of its workforce, OpenSea 20%, Masterclass 20%, Bird 23%, and so on. Guys, we've had so many companies laying off a lot of its workforce. And how is that? The economy is still has the lowest unemployment rate. That just doesn't make any sense, guys. So either those numbers were hooked, or the economy is just, there's every single person that is being laid off is finding another job, which is very unlikely, guys. So those are the reasons that I think that the rally that we had on Friday may not stick. And one other thing to show you guys here is that a Goldman trader, okay, said this on Friday. Now, while all the attention is on rates, okay, the Federal Reserve is raising interest rates, the real risk is that global QT, quantitative tightening, is just starting. What does it mean? This means that the Fed is extracting money, is extracting liquidity out of the market, and when there is no liquidity out of the market, guys, that leads to recession, that leads to a massive crash in the stock market. Now, we've been used to QE, quantitative easing, where the Fed, the banks are just pumping money, okay, in the stock market, in the economy. Now, Now this is the complete opposite. Okay, well, they are extracting money out of the stock market. Does this sound to you like we are going to all-time highs? No, it doesn't to me. We may just had a reaction, a positive reaction out of some cooked numbers, but guys, be aware, okay, because this may not be what everyone else is expecting in terms of all-time highs and no recession. In my opinion, we are going to have a recession. How bad will that be? We'll just have to wait and see. But be aware and be careful of in terms of going all in the stock market, as I've seen some people doing on Friday. Now, in terms of the week ahead, guys, we have some very important news announcements coming out this week that we have to pay attention to. First of all, on Tuesday, we have the Fed Chair Powell speaking at a conference on Tuesday at 2 o'clock UK time, so pay attention to that. We may have some movements, some reactions from that. And in terms of the next most important, okay, maybe one of the most important economic news of the year, okay, will be the CPI data. Now, the inflation data. Now, guys, the inflation data is predicted to come in at 6.5%, down from 7.1% the month before. This suggests that the inflation is coming down and has been coming down over the last month or so. Now, I don't know about you guys, but in terms of inflation, I don't see inflation coming down, especially when I go to the grocery store. Everything seems to be getting more expensive, not cheaper. Okay, so I mean, does it mean that inflation is actually it's higher than previously anticipated, and it's perhaps higher than last reading that we've had of 7.1%. Now picture this. Let's say we get an inflation higher than that prediction of 6.5% and even higher than last month. Now guys, if you get an inflation higher than last month, that's it. This is the mother of all crashes, okay, to happen on Thursday, no matter what, because it just indicates to us that, listen, a recession is on the way because of the mass layoffs. Now we have inflation that it just won't go down, which means that the Fed has to keep raising interest rates, which means that it will cause even more pain in the economy, guys. So pay attention to this. This is going to be very, very important. So if we get an inflation reading that's higher than expected and higher than previous month, that's it. The mother of all crashes will happen on Thursday, no matter what. So pay attention to that and be prepared for it, guys. Be prepared for it. Now, in terms of the what we should be expecting in terms of the technical analysis on the charts. Now, guys, we finally managed to break out of this consolidation that we had for the last couple of weeks. So this is the US 500, the S&P 500. Now, what are we expecting for this week? Now, it looks like we finally managed to break out of this consolidation and we are heading into this trend line here. This trend line, guys, that has been acting as resistance for for the whole of 2022. What does it mean? Are we going to go through we're going to go to it and go through it and go to all-time highs? Now that anything can happen in the stock market. And imagine we get an inflation reading of not 6.5%, now we get a 4% or 5%. I mean, that's it. If that happens, the inflation is completely gone and all-time highs it's on the cards for sure at that point. I mean, that's very unlikely, but anything can happen, obviously. Now, what I'm looking for this week, guys. Now, we've managed to get out of this consolidation, and there's two things that I'm looking at. First of all, we open here with a gap. Okay, we open with a gap higher. We are consolidating now to go higher. Now, we may go and fill this gap and then go higher. Now, obviously, guys, the trend here on a small time frame is bullish, so there's no question about that. Now, one scenario that I'm looking at, guys, is we have an IC here, okay, on a 2-hour time frame at 39.50, okay, or so, where price may have a reaction, but we have another IC right here, right at the upper expected move for the week, guys. And right there, right at the upper expected move, we also have what? We also have the trend line. So imagine us rallying all the way to the trend line, to the upper expected move here at towards the, at the beginning of the week, and then there comes the inflation, and then there comes inflation that's higher than expected, and then boom, we go to new lows. Now that would be a nice scenario if it was to happen. Now pay attention to that. As I mentioned, the 2-hour time frame, we have two ICs, and the one that I'm watching in particular will be the one here at 39.90 or so, where we also have the trend line on the daily time frame. May have some nice short possibilities, okay, either from here at 39.50 or from here. As it stands, it looks like we are heading higher. Okay, we are bullish on the smaller time frames, and unless we see a break, unless we go back within this range here, okay, then we are going higher. Okay, if we do go back within the range at the beginning of the week, we may stall here for a week, and then the inflation data will decide. Next, guys, we get the UK 100, and as predicted, guys, we 100% smashed this. We did mention in last week's video that I was targeting that because of the strong move that we had and the strong reaction that we had out of this daily IC here, that we are most probably going to clear the liquidity resting above here, and that's exactly what happened on Friday. Now, what's next? Now, it seems a bit crazy that the FTSE 100 is going to perhaps all-time highs. I mean, it's very close here to all-time highs, guys, which is crazy. We have a war going on, we have inflation, and yet the UK stock market is going to all-time highs. That's a bit crazy, but it is what it is now. What in terms of what we should be expecting next year? Now we do have the liquidity here, okay, and all-time highs sitting at around 7,910 or so. So a possibility will be for us to go clear the liquidity, consolidate, and maybe move lower at that point. So that is definitely on the cards. As it stands, guys, this is very, very bullish. We are getting into overbought territory here. But look for some break of structure before going short here. This seems to have a lot of legs higher, so don't go against it. As it stands, this looks bullish, okay, and we may go higher to clear that weekly liquidity and to all-time highs, where we may be able to get a short from. As it stands, don't have any divergences as it stands, guys, so unless we start to see some clear divergences, no real short for now. Next, guys, we get the DAX, the Germany 40, and guys, we've just managed to clear the liquidity out, this liquidity here that I've mentioned over the last couple of weeks. I did mention that unless we were able to break here, okay, on the weekly, unless we manage to break below the 20 and the 50 EMA, then there's a possibility we go higher. And look at this weekly, just look at this weekly candle, guys. This is very, very strong here. Now this can be a fake candlestick to induce a lot of buyers, okay, so it's very important here that we get some follow through on this, okay. If we manage to get some follow through on here, we may be able to go higher. Now, one thing that I'm looking at, guys, just look at this for a second here. We managed to clear this liquidity. If you go to one, we literally just cleared it this morning. And look at this. If I was to do this, right? Previous support turns into resistance here, guys, okay, so this will be huge. Where? Right at this daily IC here, guys, so this will be crucial here. We may go higher, okay, we may go higher right into this daily IC here. Now this will be a very critical point. If we go through it, if we manage to blast through it, then we are going to all the way up here to this weekly IC at around 15,860 or so. But if we manage to see some consolidation here, okay, and this is at around 15,060, then that would be a nice point to go short at, guys. So monitor this. This is going to be a very interesting trade. either this week or in the next couple of weeks, guys. Very important trade. Okay, as it stands, this looks very bullish, guys. We're starting to see some negative divergences building. So if we do see some any break of structure happening, okay, I'm happy to take a short. But as it stands, this looks very bullish, guys. Don't go against it. Okay, look for some clear signs. Maybe the inflation data in the US will provide us with some clear signs. Okay, but as it stands, this looks bullish. Next, guys, we get the Dow Jones, the US 30 here. And again, guys, here we managed to break out of this consolidation here, and we are heading back into this range that we've had, okay, for a number of weeks here. Now, what's next for the Dow here? Okay, so this looks very bullish, as I mentioned, and as I previously mentioned, and as I've said before, guys, all I was looking for here, I was looking for the 20 and the 50 to be breached. I was looking for a weekly candlestick to close below those. Because we haven't done that, this is again very bullish, okay, from a technical analysis point of view. Now we got the fundamental analysis that tells us that, listen, be very careful, but in terms of the technical analysis, as it stands, this looks bullish. Okay, so don't try and short or go against it unless we get some clear signs for that thing. And what am I looking at? Well, guys, we're getting here a very nice IC here at 4-hour IC at 34,100 or so, and okay, we are just here. We are just in the 2-hour IC here, okay, in this 2-hour IC and we are just consolidating here. Now we are starting to see some divergences that are building. However, don't try to go against it, okay? This looks like, unless we manage to get a break below, then this has more legs higher for now. And what are we targeting? Okay, it will be this daily IC here, and if we look at the 4-hour time frame, it will be that IC on the 4-hour that we would like to see some consolidation. If we manage to blast through it, perhaps the inflation data will help with that. Then, you know, I think we can go a lot higher here, guys. All-time high is also a possibility, but we'll at least going clear that liquidity that is resting above that zone there. Next, we get US 100 here, guys, and here this has been, as I previously mentioned in previous videos, one of the weakest out of all the indices, and it's consolidating here at an important level, right above the previous lows, and it's trying to go higher, okay, but it's not, you know, it all depends on that CPI data, guys, of the inflation data. Now again, here we did what? We did open with the gap higher. Okay, we haven't managed to fill this gap as of yet, so we may go fill the gap and then go higher. Now in terms of going higher, what are we expecting to see? Well, we do have, as I mentioned previously, this 4-hour IC here that we can look for short opportunities. But as it stands, guys, this has legs and this can definitely go higher. We're not even close to being overbought. There's no divergences, there's no bearish, there's no negative divergences, so this can go a lot higher, guys. So be very careful on that, okay? Don't try to go against it, okay? Then from a technical analysis point of view, we can definitely go higher, especially that this is being going to beaten up indices, so investors may look to go back into it and take this higher for sure. Okay, if we manage to go and break below, okay, if we manage to come back within this range here at some point this week, you may wait for the inflation data, will be the catalyst to either go higher or lower at that point. And if we do go lower, then definitely new lows for the year and possibly more pain to come in here. Next, guys, we get the VIX, and the VIX here has been, we opened up with the gap higher. I don't understand why, because we should have opened with the gap lower. It just seems that there's still some sort of fear in the market as it stands. Now, here, guys, all I'm looking for is 25. I'm looking for a close above this level, continuation, and perhaps we get a capitulation here. As it stands, we have two gaps that are still left. Okay, so we may fill those at the beginning of the week, and then the CPI data most probably, okay, decide. And if it takes this higher, then I don't see it stopping. Okay, if fear is coming back into the market, that's it, guys. Okay, that will be crucial. Next, we get the DXY. And guys, we have this just been a yo-yo market in here, okay, where there's nothing been happening here in the dollar for the last couple of weeks. We've just been consolidating within this daily IC here. Now, guys, what we are looking for in here, we're looking for a break above or below this area here. If we break above, we need to see some continuation. Okay, if we break below, we also have this trend line here. We need to break below. We need to see also some continuation. So if you have two red candlesticks, that will continue one from the other. Okay, then we can say that, listen, the dollar is definitely going lower. Okay, and again here, if we go higher, we break this consolidation and then we see some continuation, then I'm looking at, as I previously mentioned, 109,500 for some sort of top for the dollar, but we may go lower at that point. And in terms of where do we see the dollar going down, well, we may look at the daily IC here. It's sitting at around 101,200 or so. So we may see some consolidation, then come back, retest this trend line, and then go lower. That is definitely a possibility. So watch on that, guys. Also on the weekly, I did mention last week I was looking for the 50 EMA here to for the price to go above it. Now it hasn't managed to go above it, and that is not positive for the DXY whatsoever. So we need to see price trying to go above it and regain the 50 EMA. If it is not able to do that following the CPI data, then the dollar has a lot more downside to come for sure. Next, guys, it's gold, and here, guys, we just smashed this 100%. I did say if we are going to go higher, if we manage to clear this liquidity and hold it, then we are going and targeting the next liquidity, and that's exactly what happened. We just literally managed to clear the liquidity here this morning here. Okay, guys, so I did mention that, listen, even though the dollar may not be going down, gold has definitely legs to go higher, and that is exactly what happened. Now we need to see what the reaction will be following this liquidity grab here. If we manage to hold here, consolidate, and then go higher, guys, then the daily IC here is definitely on the cards, sitting at around 1950 or so. And here, that's when we'll be looking for perhaps some short opportunities to clear some of this liquidity resting here before maybe going higher. So monitor this, guys. This week, most probably it will be a catalyst for gold as well, depending on the CPI data, depending on what the DXY will be doing. But definitely very exciting times here for gold. Lastly, guys, we get Bitcoin, and guys, there's nothing happening here whatsoever, and you know, this is more or less correlated to the NASDAQ. You can see the NASDAQ is not having, you know, any power to go higher, and that's exactly what's happening with Bitcoin. Now here we are getting some divergences that are building up, so a move higher, okay, wouldn't be out of the ordinary, but we are so close to our target here of 12.5, guys, so it would be nice to get there. As it stands, again, there's no liquidity being pumped back into Bitcoin, and because of that, we have to be very cautious. Okay, if we manage to break above this, okay, then we may see some follow through. Unless we see that, again, there's nothing to do as of now, guys. That's pretty much it for me, guys. Thank you very much for watching. If you are new to trading and would like to learn more about the strategies that we use, head over to our website, mcitradingacademy.co.uk, where you can inquire and find out more about the mentoring courses, the one-to-one mentoring courses that we offer. You're also able to join our Discord community for free. Thank you very much, guys, and I hope you have a great trading week. Be safe out there.